Alrighty, welcome guys. It's Friday. It's time for a video again. Time for an overview. Um, it's actually St. Patrick's weekend here in Ireland, so everybody's getting ready to party. Well, apart from me, I'll be stuck at home. But anyway, my partying days are well over me. So I think all in all, we can cap off the week by saying it's been pretty uneventful, to be honest. Um, flat to nowhere really in most markets. So it's been, in general, I suppose you can classify that as a correction in progress. But I suppose that's a blanket term to just kind of wash off everything that's happened. Let's try and dig a little bit deeper and hopefully kind of uncover some nuggets of useful information from the quagmire of the markets this week. Okay, so hey, how about it? I'm on gold here, so I may as well start on gold. So during the week, it may have been yesterday or was it Wednesday? Basically, the market kind of forced my hand to adopt the alternate count here, and so let's go through that. This doesn't change. The impulse is to the upside. The trend is to the upside. I think the long-term trend has reinforced itself again in a possible wave 3 red. So we've had wave 1 here in green complete. Now we're looking at a 3-wave pattern correction in wave 2. So we have wave A, wave A down, complete in, I think it was early January, was it? Then wave B has traced out a rather impossible to follow contracting triangle, and the stickler about triangles in general is that they tend to just fool you until the last minute. Especially if you're looking at if you're correct in the longer or larger wave pattern, then a triangle thrown in there in the mix usually throws off your radar. It tends to throw my radar off anyway, and they're very hard to pick out. They're very hard to track as the wave is progressing. But when you start to zero in on, say, wave D and wave E of a triangle, then it starts to form a clearer picture, and that can take a while. Anyway, this wave 2 here is what I'm talking about. So we had this breaks out obviously into an ABC pattern. We have wave A down, wave B takes on this contracting triangle form with A, B, C, D, and possibly E there, complete on Wednesday evening, early Thursday. And now we see the market starting to spill down below the rising trend line. It hasn't broken initial support there, 1307, just yet. But I do expect that to probably happen, maybe even this evening. Market isn't quite closed yet, but we're running into the close now, the US close. So this B wave contracting triangle, and then we'll get a C wave down to complete wave 2. I'm not entirely certain that we'll make the lower, that the price will reach the lower trend line here. I have a feeling if we go to the shorter term chart, I think we'll pick a better. I don't think we'll get that far, to be honest, given the fact that we're probably reaching an exhaustion of bearishness anyway in gold. Okay, so let's get into the hourly chart. So here is that double combination. I think either a very complex flat or a double combination. That has yet to be kind of decided by the price action. So we have our wave A to the downside in blue there. Then we've got this contracting triangle within the dotted lines there. A, B, C, D, and E complete there on Wednesday evening, and possibly now we've got a 5-wave pattern or else a 3-wave pattern to the downside to complete. This wave 1 here could easily be placed here depending on on how. I reckon, depending on the early action on Monday, if we get a three-wave recovery back towards the 1320 area, then we will probably see this wave 1 come down here, and then wave 2 would be around the 1320 area, and then spill down into wave 3, 4, and 5. We have that initial support there at 13. Well, we have 1307 at wave A and 1303 here at the internal wave B of the triangle. So that would be kind of the lower extent of the price action. And 1303 is the minimum target for a valid wave pattern to be complete, to be considered at minimally complete. If you can decipher my terrible English on a Friday evening. So 1303, let's clarify that. Terrible English, because English isn't my native language. I should be speaking Irish, but that's not going to happen. Okay. So 1303 is a minimum target. We will, I think, most definitely will break below 1303, but we could see this interim trend line here. You see connecting the previous two lows of wave A and the internal wave B there. So if we see a clear 5-wave pattern and a reversal around that 1295, 1294 area, that's another possibility. Apart from that, a complete 5-wave or a complete 3-wave pattern will be the initial signal to the upside, or a initial signal that this wave 2 is complete. Previously, I had been speculating that this previous low here was the low of wave two, but it's still not invalidated. Actually, it's still valid to count that interim low here at 1303 as the low of wave 2, but just the price action off that just was not convincing enough to kind of go with that count at that stage. Now we may have to kind of revisit that if we get a break of 1340, which is the internal wave C, way back last week. If we get a break at that 1340 in an impulsive pattern, well, then we can probably count the correction as complete at 1303. But for early next week, I'm sticking to my guns here on this one. Well, I can leave that there as an alternative count right now. So we'll get so there's our alternate low for wave 2 at 1303. I think given the action that we've seen off the high labeled wave B here, I think we can count 5 waves down, a possible wave 1 complete there, maybe a reversal into 1320 for Monday, or the overnight on Sunday night, and then a further decline in wave 3, 4, and 5. Next week, I think we could target between 1280 and 1290. We could say 1280, 1295 for the low in wave 2, given that we get a break of 1303. Okay, so that's gold. Let's go to crude oil. So we got a break of that declining trend channel, that declining trend line there, so we can get rid of that. And we got a rise in so far in 3 waves. That may develop a little further. We might get a minor correction there, and then a further pop up to that upper trend channel there again to complete a 5-wave pattern. It's not entirely necessary either. I think we were looking for about 6250 or 6260 for the high of wave C here last night, and we got that. So I think we can, for the most part, we can reliably call this correction higher complete, because we've got 3 waves. The internal pattern, It's not totally to my liking, but life isn't there to please me all the time. I have to go with what's actually on the screen, what's appearing in the price action, like everybody else. But we've got a nice fill trend channel. We've got 3 waves. In general, it fits the bill for a complete correction to the upside. We've got 5 waves down before that. So we're looking at again, I should, this wave 2 here is an alternate wave 2, because we could also count wave 2 gray as the developing high here, but we'll deal with that next week if needs be. But for the short term, I think we've got a 1-2, 1-2 pattern complete, and if we get a break of an internal wave B, I mean, you could be talking about 61.11. So if price breaks below 61 again, that'll probably be the first signal that a possible wave 3 pink or higher degree has begun, and definitely a break of support of 59.95 is pretty much confirmation that the top is in and we're done. At this stage, just like stocks, just like the Dow, we've got large degree wave 1 and 2 complete, smaller degree wave 1 and 2, and now a third degree of waves 1 and 2 complete. So if this overall count is correct, then we need to start to see a very impulsive decline developing in crude oil, and the first signal of that will be a break of, or the confirmation of that, let's say, will be a break of 59.95 there. Okay, so for early next week, again, we'd probably look for, lower high below 62.60, let's say, with an impulsive pattern to the downside. If we get that on Monday, well, then next week will probably turn out to be a pretty catastrophic week for for crude oil prices. The Saudis are not going to like it. Or neither would anybody really in the oil industry. A good friend of mine is working in the oil industry in Qatar, so he's not going to like it either. Okay, so I think for next week we can expect a completion of corrections to the upside and a beginning of a third wave decline. That declining trend line there seems to be a decent resistance level there. So you could draw that on your charts and watch that for early next week. So early next week, lower high, spill into third wave to the downside. Okay, so we've got gold, crude oil done. How about we tackle stocks for the moment? Here's the 4-hour chart. That's the all-time high, 26,604 or 605, whatever it was. Well, now, again, in stocks, we have wave 1, wave 2, 3-wave correction into wave 2, wave 1, 5 waves down, 3-wave correction into wave 2, 5 waves down again, and I think we're seeing the completion of a 3-wave correction on the lower term or the shorter term charts on the hourly chart or the 30-minute chart I have up here. But just like crude, we've got this pretty bearish lower highs. We've got the completion of lower degree, what would you say, lower degree head and shoulders patterns at 3 degrees actually, and we've got a wave count which is suggesting a pretty rapid descent is ahead of us. So the initial support would be the wave 1 low there. So that comes in about 23,300, which is a nice amount below where we are right now. That's like 1,600 points. The next viable or legitimate support below that is the previous fourth wave here. So that's 21,706, and again that's 3,200 points below us. And the next viable support again below that is the previous fourth wave there. That would be 20,300. So a third wave of a third wave to the downside, we're looking at breaks of 23,000 and probably a break of 21,700. I wouldn't be surprised if we get into below the 20,000s. Should this wave count line up in our favor? Okay, so that's the 4-hour chart. In general, on the 4-hour chart, we're looking at the development of a pretty severe decline. And this is a 30-minute chart. I think I'll go out to the hourly chart here to give a review. So there we've got our initial decline into wave 1. We've got our 3-wave recovery into wave 2. We've got a decline into wave 1 gray, a 3-wave recovery into wave 2, and now a decline in 5 waves. And a possible 3-wave recovery complete. I suppose you could flip a coin on that one, because the developing pattern can be interpreted 2 ways really. We didn't get a break of Wednesday's high, so that 3-wave. There's 2 ways to view the 3-wave pattern. You could call this previous low here the low of wave 1, and then you get an expanded flat or a regular flat, A, B, C, into wave 2. Or you could call Thursday's low, I believe it was Thursday anyway, as a failed 5th wave and a 3-wave recovery off the failed 5th, which would bring you into wave 2 again. So we've got this nice. The fact that the price hit, or the prices hit 25, I think it was 25,040 or something, within a few pips of that level, which was the previous wave A here, and we had a pretty sharp decline off that high. It does tend to suggest that wave 2 is complete. It's a pretty significant interim high at wave A there, and the fact that the price bounced off it there yesterday morning does suggest that we've got something going on here. So far, we've got a possible 3-wave recovery off that the spike to the downside there. So again, we could have 5 waves down at a lower degree and 3 waves up. And so far at today's highs, we haven't broken the previous Thursday's high at 25,040. So tentatively, I could say that this is complete. Obviously, on Monday, we'll need confirmation of that, and the confirmation will come with a break of previous lows, 24,656. The further below that, we've got a previous wave B here at about 24,220. So I realize that the volatility in the market has kind of really expanded our it's expanded the interim lows and highs, and they're not ideal for trading, especially for people who are trying to if you're trying to minimize your risk, your capital on the table at any one time. But I suppose that's why that's why I like to analyze and possibly overanalyze before making any trading decision. But for me, right now, we've got a definite 3 degrees of 5 waves to the downside and 3 degrees of 3-wave recoveries to lower highs. Let's go to the 4-hour chart again and see what we can learn. I mean, we've got a 1, 2, 3 previous extreme highs in MACD. We've got a double top here in RSI with an initial bearish signal with a break to the downside, or a break below the center line in RSI on the 4-hour chart. So, and you can see right here, if we take the chart in here a bit, you can see that the 50 period moving average is now right back up to meet the 200 period moving average. We've got a nice plateau there to the top, and we've got the beginnings of a nice decline off that high. So if we get a failed or a break or a failed break of the 200 period moving average, which would go along with the wave count, would go along with the momentum setup, it would go along with everything, and it would kind of be the icing on the cake for a complete reversal. So for stocks, again, it's looking pretty dicey for next week. Any break of previous lows, initial low at 24,660 or thereabouts, any breaks of those those previous interim lows will signal that we've got a third wave to the downside possibly underway. Okay, so let's go to dollar yen. Let's keep working backwards. So why not? So we've got this alternate account hanging over our heads. Let's go to the 4-hour chart to see that alternate account. There's a few ways to look at this. So this is our C wave here, a wave C of 2. So that's what we're looking at. It's a very large degree correction closing out here right now. So wave C should, in general, be 5 waves. It should complete in a 5-wave pattern. So I think we've got wave 1, wave 2, a possible 1, 2, 3, 4, 5, 3, 4, and 5. Or sorry, wave 3, wave 4, and wave 5 to the recent low. And that's initially what I've been going with. So the recent low at about 104.50 or 104.80 or whatever it was. Let's actually get a price on that before I fall asleep. 105.20. So that recent low at 105.20 is being counted as the low of wave 2. So the alternate count is still hanging over our heads, and it views this sideways action here as a possible contracting triangle. And that would be a contracting triangle wave 4. And the way you could view that would be, let's trace that out. Wave 1 down, wave 2, a series of 1, 2s to the downside here. So you've got 1, 2, 3, 4, and 5. And that would be wave 3 here. And then we've got this contracting triangle, possible wave 4. And then we'll see another drop into the previous support there, 104 area, and the lower trend line, which would be just below 104 to complete wave 5. That's the alternate account. Given the action over the last few days, it is definitely pointing in that direction. And it's something that we have to be prepared for. I still haven't changed my view. The long-term view of dollar yen is that we are barely at the beginning of a large-scale move upwards in the dollar in general, but definitely dollar yen. We've got a wave 1 complete, and we're just completing a 3-wave pattern in wave 2. Okay, so let's go down to the short-term chart. This is that possible contracting triangle here in within those red trend lines. We've got a further bounce this evening, which could be. I'm definitely leaning towards the alternate count at this stage. So this could be a wave A, B, C, D. Could be wave E completing in wave 4. So we've got a further retracement higher into 107 before you would get a final decline into wave 5 at about between 104 and 102. So I don't usually expect these final declines to reach the lower trend line, just because the final decline usually means exhaustion, and you never usually, in terms of Elliott wave, more often than not, you see a failure to meet lower targets. So if this is a contraction triangle, then early next week, probably Monday, we should see a three-wave recovery into that declining trend line here at about 107, and then further declines below support. First initial support is 105.24, so further declines, a break of 105.24 will confirm this alternate count, which I am leaning towards anyway. So yeah, just the general lack of impulsiveness of this rise, which can still be counted as a leading diagonal or wedge pattern to the upside. Just the general lack of enthusiasm has kind of really solidified the alternate wave count possibility here. So Monday, I think we should get confirmation on the alternate count if this is in fact what's going to happen. All right, let's move on to. I think I've exhausted that one, haven't I? Let's move on to pound dollar. All right, pound dollar. I've been counting as an ongoing saga of a possible decline in wave 4. This wave 4 brown here with a complete and now with the price now possibly rising in within wave 5, and the initial target was 143, 143.50, about that. So again, this week hasn't given us a whole lot to go on, apart from the fact that this could be a series of 1-2 waves to the upside. But so far, it just wants to be taken as a 3-wave pattern. All right, let's get down to in general, I'm still looking for a pop into about 143 to complete this 5-wave pattern here. This 5 waves of wave C. So here is the hourly chart, and you can see that this rising trend line here is definitely, you would have no problem taking that as a 3-wave rise, and the market should just spill right off that again. But of late, of the last day or two, we've seen this really corrective retracement here. So I'm going to tentatively say that this has now completed a wave 1, wave 2, wave 1, 2, 1, 2 to the upside here. So we should probably see, if we don't have the low in right now, I think we should probably see by Monday a turnaround into a third wave and a break of resistance. Their initial resistance 140.68. That's the previous wave B there, and a break of that 140.68 will confirm that the price is now rising in a third wave. Let's get that third wave into screen there. Wave 3 pink. So I think for Monday we can expect, all being equal, I think we can expect wave 1, 2, a break of resistance in wave 3, shallow correction wave 4, and a completion of wave 5 over the next couple of days. So probably by Wednesday we should have wave 3 complete, if this is in fact correct. Obviously a break of 137.11 negates that completely, and we'll turn our focus to the downside, probably for the longer term. And okay, that gets rid of that. It's been a frustrating market, I tell you, this week, for me anyway. I don't know about you. Okay, euro dollar. Euro dollar I am counting as further advanced than cable within the wave pattern. So We still haven't got confirmation on this in the long term. That'll only happen with a break of two particular highs, really. This previous wave 3 here, which comes in at about 120.90, and then we have this previous wave 1 here, which comes in at about 119.60. So we've got about 120 points between two, 130 points between two previous significant highs, because most especially this previous wave 1 here at 119.60. We're a little bit off that right now, but I mean, that could happen with one good afternoon's action. A break of that 119.60 level will confirm that the market has pretty much confirm the market has topped. As you can see, it would indicate that we've got that complete 5-wave pattern, and the market has turned down again with a break of the wave 1. It kind of negates an extension of that 5-wave pattern. Okay, so let's get into the hourly chart for euro dollar. Okay, so that's the previous 5th wave high at 125.55. That's the most significant or key resistance right now at the moment. Key support I've left in there for the short term. For the short term wave count is 121.54. So it's a wide enough band, I know that. But we just got to work with what we have. I'm still leaning towards the fact that this is a 5-wave pattern to the downside, followed by a 3-wave reversal into 124.45. And right now we could be looking at wave 1, 2, and a possible decline in wave 3 of wave 1. So we're looking for a 1, 2, 3, 4, 5 of wave 1, followed by again a reversal at a lower degree to complete what would be 1, 2, 1, 2, 2 degrees of impulse waves to the downside. At that point, we still won't be far off the price territory that we're in right now. So we'll be talking about 123 for let's get that 123 for a initial candidate for a high of wave 2 pink. So early next week, if we get, by Wednesday, I reckon, if we get 5 waves down followed by a 3-wave recovery, I think we can call that a second degree of Elliott wave signals to the downside, and a possible shorting opportunity. Break of key support will really work in favor of the bearish view in euro dollar right now. Okay, so I think I've done 6 markets, and I try and keep it as short as possible, but these things always go on. Thanks very much for listening this week, guys. And for those of you who survived the weekend, we'll see you back here on Monday evening. I think it's a bank holiday in Ireland anyway, but I reckon the markets are still open. Of course, because we're just a puny little nation. Nobody follows us. Enjoy, if you're going to St. Patrick's parade. If you're going to a parade, enjoy it. Especially you guys in the States, you seem to enjoy it much much more than we do. So thanks again for watching. Godspeed, and we'll see you on Monday. Bye bye.